All right, Toll Brothers. This was a stock I was very excited about as far as their earnings report's concerned. I definitely needed to make a couple videos today, obviously, too. We're going to be talking about Toll Brothers and HP stock tonight. Tomorrow morning, we have NEO. Expect a video later today, or later tomorrow on NEO, because I'll be at work the whole day. But I will make one on NEO. So today we're going to talk about Toll Brothers, though, right? Toll Brothers was up 9% on the normal trading session, 9.5%, and continued to go up 6.5% after hours as well. Pretty massive. It's one I actually wanted to go down because this is a stock that, well, I got to be honest, I like this stock. It's one that's been hit pretty heavy still. I mean, year to date, down a good bit, probably around 15% if you account for after hour gains. This stock's been hit pretty hard this year, no doubt. And obviously, I wish I had picked it up down when it was in the $10 range. But as far as these earnings are concerned, it's up. Well, if you look at that, Toll Brothers Q2 GAAP EPS of 59 cents, beat by 17 cents. That's a very good beat from an EPS standpoint. And revenue of 1.55 billion, which was down 9.9% year over year, beat by 80 million. Interesting. Definitely interesting stuff. So, not a bad earnings report as far as that results are concerned. So we'll take a look at some of the fine details here and get into their press release. So, Toll Brothers reports drop in home sales revenue 11% year over year. Net signed contract units down 22% and backlog down 1%. The company expects its cost reduction initiatives to decrease overhead expenses by approximately $50 million on an annualized basis. Not all that much for them, all things considered, but with approximately $25 million in savings in the remainder of the year, fiscal year. From the balance sheet perspective, very exciting stuff. No major debt maturities until February 2022. We'll get into the balance sheet on the press release, but Toll says despite over the last 3 weeks, we're up 13% compared to the same period a year ago. So I think the question obviously exists with Toll Brothers. This is a home construction business. They construct houses. How are they going to perform during recession? Because we're going to be in a recession type environment, and the houses Toll Brothers built are very high quality ones. These are high end houses. So all things considered, if we take it back to 2008, that's right. I mean, look at this. If you take it back to 2008, you actually don't see a major dip at all. The whole market was going down 60%. Toll Brothers didn't see much of a dip. Now, obviously, they had some egregious highs in 2006, but all things considered for this stock, nothing crazy. Just imagine investing in this thing in 1991 for $1. Whew, gosh, you would have been happy. But anyways, I mean, not much of a major dip. So are we going to be in the same boat in this situation? Are people going to still be buying these houses? In my opinion, they probably will, because these are high-end houses. These are very high-dollar value houses. So people who have money are still going to be buying expensive houses. It's just kind of how it is. They're not going to be the ones foreclosing like everyone else. So, quarter two highlights: net income and earnings per share were $75.7 million and $0.59 per share, compared with a net income of $129.3 million and 87 cents per share in the second quarter of last year. So not all things considered, that's not beautiful. Not a beautiful number. It is a decrease year over year. You don't like to see that, but with a lot of the headwinds right now, it's not unexpected to see a decrease overall year over year in EPS. Home sales down 11%. Home building deliveries were up 1%. Contracts down 22%. Contract value was also down 22%. Home sales gross margin was 17.5%. Adjusted home sales gross margin was excludes interest and inventory write-downs, was 21%. Pre-tax inventory write-downs totaled $14.2 million. SG&A as a percentage of home sales was 11.8%. The company undertook a number of cost reduction initiatives, as they mentioned. Very nice. Previously announced, obviously guidance has been pulled. Not a shocker at all. They're not giving full year guidance, but you know what, they're pretty positive on things. All things considered, they're very, very positive on where things are going to go for this company in the future. As far as what they can offer, really home buyers, these ones that are buying expensive houses. As far as these financial highlights, this is not anything all too, significant in my perspective, what I've looked at, but we'll look at this balance sheet on this company, as they just really mentioned the effects that they're seeing. Overall, well, cash and cash equivalents of $740 million, and that's versus a $1.2 billion mark in October of last year, which will be a nice 6 months ending number. I mean, that's interesting. Overall, though, if you look at total assets in general, total current, or really total assets as a whole, you get $10.8 billion versus, that's right, $10.8 billion 6 months ago. So really where that flipped was, you see more in terms of inventory, as far as houses is concerned. You have more in accounts receivable, and that accounts for a good portion of that. So from liabilities, total liabilities of $6.2 billion versus $5.7 billion 6 months ago. So they did see an increase in terms of liability. Total stockholder equity, though, of $4.6 million, or I've lost my mind, $4.6 billion. Not a beautiful number, but again, I like Toll Brothers. I liked it a lot more when it was in the $15 range, that's for sure. At these ranges, getting near 35 now, I'm not as big of a fan of it. Off of a P ratio basis, it's still relatively cheaply valued. And based off their market cap, they're pretty cheaply valued as well. I would argue undervalued, but after this bump up today, potentially not. I wish I'd bought in more. If it goes down again, I might consider buying it up. Just so many good freaking, so many good picks out there before when we saw the market dip so heavy that I didn't think about adding new positions. But yeah, that's Toll Brothers for you.